This is Efrem broadcasting live from NakedSwanTrading.com on May the 2012 at 10:06 a.m. What you're seeing on the screen right now is a risk map of the E-mini S&P 500 June futures contract. Each price bar on the screen represents a price range of that took place over a 13-minute period. And these forward-looking boundaries are indicating critical risk levels. As we indicated in our prior market update on May the 29th, we said that there was going to be a volatility episode on the downside taking place as we enter the early June period. This morning, the market has come down off of the critical levels that we identified in the prior tweets on Naked Swan Trader, and they're also provided on the side panel of NakedSwanTrading.com. They indicated that there would be a reversal in and around the important resistance area of 1333.75. The market banged against that point twice after leaping up off of a low, as expected, that it would actually resist at those levels. So there were two opportunities for intraday trades at those levels yesterday, and now, well, actually, and the day prior, and basically now the market is now banging into support because this line is sloped down. Any lines that are sloped down represent positivity, and it's not an area to buy on this time scale. Maybe if somebody was a super short-term trader and trading a tick chart, then yeah, they could do some scalping along here for a few seconds. But you could already see that there's some projections pointing below here, and we're entering a very dangerous period. You don't want to be playing around on the long side, okay, unless you're a very established trader, okay. And the goal here is to really lay out what the critical risks are going into the early June period, into the middle of June. And you could see over here, this teal boundary acts, until it actually slopes up, acts as support between the current low that just happened at around 10:16 in the 10:16 interval to the 10:03 interval, with the low at 13:01.25. You could see critical support is at 1375. So it went right into that critical support, and it's kind of just right over there, but projections are already pointing towards the 1297 area, and earlier we indicated the 1285 area and the 1282 area right now is critical support as we go into the June period. Now on this map over here, 11:34 in the morning on May 31st, there's some enhanced risk potential, which basically means that any intraday rallies could be fiercely met by selling as you go beyond the 11:34 area. Also, you could see this purple boundary is sloped up, okay, and that starts at a level, basically at 1315.75 into 1318, with 1319.75 to 1320.75, with an outside, with outer risk to 1323.75. So what it basically means is that regardless of any rallies that are that happen again in this market, highly unlikely you're going to see one, because all these short-term boundaries have already sloped up and we're penetrating underneath levels that are projecting down. But for whatever reason, that is going to cap the market. So that high that was established over here is a solid high, and basically you can see these extend a little above the high, but it's a failure, in the event of a bounce. And there's an open pocket down to that critical support into the 1282 to 1285 area on a higher time frame. On this time frame, you could see 1302 as a critical area, especially there's a toxic volatility event that is enhanced after the June 5th period at 11:47 a.m. And being below the 1302 level means that we have to trade completely below that area for 13 minutes. It's not a matter of if, it's just that, is it going to happen here, here, or here? But this is kind of the area where it maximally inflects, and that puts excessive strain on the market. Long-term resistance remains at 1335.75 to 1333.75. The rolling over to the downside before 7:32 p.m. on June the 4th, 2012. So that's another enhanced risk zone. This red area represents the critical risk window, and you could see things are accelerating as we're coming into it. Now I'm going to take you out on a view to the 89-minute chart. And basically what you see over here is a longer term outlook. This is a very dangerous situation we have over here, because as I indicated, that this area where we have the yellow band and the navy band both sloping up, inflecting, and kind of overlapping each other. So we've got a confluence of negative perceptions that are going to hit the market when we get underneath the 1285.75 area, okay? And especially the 1282 area for at least 89 minutes. It's not a matter of if, but it's just when. And you could see here that this blue line, while it's sloped down, acts as positivity. So it hit here once, there was a bounce into that critical resistance. It's hitting here a second time, so, you know, but it's descending along the way, and today does not end. The close does not end until right around here. So the most extreme level today, prior to the close, about 1293.50. Okay, so that would be a logical area where you could get a bounce on a 1-minute chart. You could even get a bounce at the upper end potential is 1299. So 1299 to 1293 is kind of the range where buyers are going to try to defend this market, but you could see it's not going to hold, because this line over a very short period of time descends down to a point where everything starts sloping up in confluence with shorter term boundaries, all sloped up and adding selling pressure to the market as we enter that critical risk window period from June 4th. And there's some also a major risk June 1st at 7:20 in the morning and beyond on any dead cat bounces. But getting underneath this critical window over here between June 4th and the middle of June, you could really see some rapid acceleration to the downside and whole new levels being breached. So 20 points is a no-brainer on the downside from there. I mean, we're talking about an event that's more on par with what I'm going to show you over here. I'm going to take you to a 144-minute chart. It happens to be all marked up. Didn't have a chance to clean it out. But basically, all you really need to look at is this region over here, the 1282.75 to 1284.75 critical support, which is going to be breached. And you can see we have a confluence of the teal boundary and the yellow boundary sloped up, acting as extra negativity simultaneously while breaking below a much longer term boundary, which is going to really cause some major unwinding of long positions and result in a lot of short sellers coming into the market and attacking this market and creating a toxic volatility event as we proceed through from the early June period into June. And then there'll be likely another massive episode which we will talk about as we approach that period in the middle to the end of July or early August period. Now let's deal with what's happening right now. We get a close, or forget about a close. We get 144 minutes of a bar underneath the 1382.75 to 1282.75 to 1284.75 level. After June 5th at 6:54 p.m. and beyond, then we have crash risk greatly enhanced. And that basically means that I'm going to take you a little bit further out and show you what that could actually mean to the market. And it's not something that is terribly pretty. So I'm going to take you to a daily chart of the S&P E-mini and basically show you an event here. And basically this chart is all marked up. Okay, so I'm going to have to clear this. Let's see. If I could zoom in over here. Don't pay attention to all the black noise that you see on the screen. Here's the real danger. That 1282.75 happens to be resting near this boundary of 1283.75. So technically on a daily chart, as far as the daily chart's concerned, that 1282.75, once it gets cleared for and we stay underneath there for one day, then we have gap risk in the S&P. Initially down to the 1210.70 area. Okay, so I'm just going to mark that on the screen. So that would be like 1210.25 since it trades in 25 cent increments. Okay, and then the next critical level is this black boundary, which kind of goes into the apex in September, but actually is also sloped up into the July period. Okay, like even between July 3rd and July 18th, it starts becoming an issue, and that's at the level of 1191. So actually 1192 area. Okay, and the lower part of this point is basically at the 1182.25 area. Okay, and what I'm saying is that if we kind of get a daily bar completely underneath this zone over here, then there's gap risk again down to the 1122.25 to the 1099.75. So 1099.75, and again the upper area is 1122.25. I'll just mark that on the screen. 1122.25. So here is the risk that we are approaching in this market, and you could also see over here that this navy boundary is sloping up in confluence with this black boundary, and that basically means that during this whole period you've got enhanced risk. This market is going to be capped, and once this market gets underneath this critical area, we're going to be capped by this teal boundary, which starts off right where the selling takes place. Okay, and even as you go into the June 13th period, market is capped at the basically the 13.50 to 13.28.75 area, and then as you get into July on that next enhanced risk period, you're unlikely to get above the 13.48.50 to 13.34 area, which the lower end happens to be the same level where we just sold off from. So there's a lot of inside resistance, hidden resistance that's not visible to a lot of time horizons and trading strategies that you really have to get your eyes around. And in the event that we don't take out that critical 1282.75 right now, and it waits, let's say, until these shorter term boundaries start curling up, and all of them would start curling up right in the area of July 18th and beyond, then at that point all we would have to do, instead of breaking critical support at 1282.75 going into the June 5th period, we would only have to break the 1290 area. So I'm just going to mark that on the screen. We'd only have to break 1290 even after the June 18th period. And when that happens, you'd immediately get a gap down to 1122. So it wouldn't necessarily happen in stages, because by that time everything would be sloped up. And actually, you've got enhanced risks going down to this area where this navy boundary starts sloping down. In the event that price gets underneath 1099.75 before it starts sloping down, and that would have to happen before August 16th. Okay? If it did do that, then you could go a lot further. But that's something we're going to have to analyze at that period to verify that that is indeed what the market wants to do. Otherwise, you kind of have support, going into that 1080 area to 1099 Okay, so 1080 to 1099.50, and then this boundary inflects at the end of November into the first and second week of December. So I'm just going to mark that end of November, first and second week of December. And that's when we're going to have to really watch out for another volatility event, because taking out that area would be extremely dangerous. And what I mean by extremely dangerous is basically the following situation. I'm just waiting for this chart to update, and then I can take you over to that further out view. Okay, extremely dangerous basically means that what's going to end up happening is that as you get into that February period, you're going to have this Navy boundary start. You can see how it's approaching this boundary. As new prices print as the market comes down, this boundary, while prices are above it, is going to cause it to actually intersect this black boundary and actually be in confluence with it around the area of 1075.25 on the S&P. And when we break below 1075.25 on the S&P for 1 day or more, then we're going to be capped. All retracements at that point are then going to be capped at the 1223 area, and at the low end will be capped at the 111250 area. So I'm just going to mark that on the screen. The 111250 area and the 1223.25 area. Okay? And that's a lot lower than we are now, but obviously in the middle part of this year we're going to be having risks coming down to that area. And once we get below this critical area, we've got gap risk going into the May period. Okay? So going into the May period, we've got gap risk. So all these areas are resistance. Gap risk down to the area of around 863, and the most extreme situation about 788. So 788 to 863 is the tail risk potential for the market. And given where we are today on May 31st, we are at 1301.75 with the last signal triggered at 1333.75 as indicated on nakedswantrading.com. So anyways, that's the outlook right now, and let's just go back and take a look at our view again on the short-term chart. So I'm going to take you to a 1-minute chart, and you can see we actually had some major clustering of these boundaries here sloped up, and that was the intraday sell. We had a sell over here also, and now the market's coming down, and then there's, you can see here, this is sloped down, but then there's some projections further into the day that could take you down into the 12, below the 1300 area. But for the next few minutes, this could just be bouncing along while this is hooked down. But as you could see here, all these other boundaries are sloped up, and we are now capped in a downtrend that's going to accelerate in stages as indicated. Stay tuned on nakedswantrading.com and Naked Swan Trader on Twitter to get the latest updates on critical market action in the index futures and high expectation stocks that are expected to either move up or down. It just happens to be right now there's a whole confluence of ones that are being attacked on the downside due to the nature of the general market and many S&P sectors impacting on the market. One last comment I'd like to make is basically on Apple Computer. Just want to basically take you there and show you why the NASDAQ is getting hammered today on a significant basis relative to the Dow. Obviously 57 points on the Dow for a 12,000 point index is nothing compared to a 30-point drop on the NASDAQ composite with only 2,800 points. And Apple has a huge weighting in the NASDAQ 100 and NASDAQ composite. And as indicated in a brief last night, that was issued last night on Apple, we showed this risk map saying that the 582.61 area would be a natural first line of resistance. Market rallied right into that area within a few cents of that area this morning and immediately sold off. And we're now heading into that critical 573.19 support area. It starts hooking. After the 1:37 p.m. on May 31st, so that's today. We get underneath that zone, especially the 564.75 area. Then we've got gap risks, as we indicated, down to 552.25 to 557.39. And then you get underneath there, market is going to be capped on retracements below the 566.75 area. Okay? And that's going to open up gap risk down to the 526 to 531 area, which is a retest of the lows, and then everything starts sloping up. You get underneath there, and you could be heading well into the 400s in Apple, especially given a situation when the S&P starts cracking below those critical levels indicated prior. So that pretty much remains our update for today at nakedswantrading.com. And you can follow us on Twitter at nakedswantrader or see our sidebar on our website at nakedswantrading.com that lists the Twitter feed. And there's usually video alerts on there, updates that provide some risk maps. But we're also launching a service very, very soon. And just watch out on our website, or you could actually, even better yet, sign up at the top of our website in order to get critical market updates on time, just on time, so that you could be aware when we're holding our special market webinars where you could dial in on the computer and ask questions, actually. And basically, we really look forward in terms of launching this product because it's going to be providing very detailed and actionable matrix outlining the critical support and resistance areas, the time horizons, and the time zones, and the critical volatility attack regions in price and time where you could really exploit the market's volatility, both on the upside and the downside, in financial futures, currencies, and equities. We will be providing about 10 to 15 elite signatures on a monthly basis that will be provided and updated. And then, of course, there'll be a special service for aggressive traders that want to get real-time intra-month updates that will allow day traders to really trade inside and outside of the highest potential opportunities that either show toxic volatility or tremendous upside surprise. So thank you very much for joining us here today with the market update, which is now ending at 10:30 a.m. Broadcasting live from Toronto, Canada, Efrem Hoffman will be closing out this presentation, and look forward to future updates. Thank you.